Welcome back, everyone. We are going to talk about today identifying clean markets. And I know you already know that because you clicked on this video. So something within yourself is telling you that you want to learn how to identify the clearest market conditions, stories, context, whatever you want to call it, to be able to get the cleanest trades off, which is ultimately going to help you grow your account and take more good losses rather than bad losses. And you notice how I didn't say good wins. I didn't say good wins because trading is all about taking losses, handling your losses emotionally until you can get those wins and end up growing your account. That is why trading is so hard to most, because they can't handle losing. And this channel, I'm going to teach you how to lose like a pro and be able to add on percentages to your account like you actually are able to, opposed to just taking trades over and over and over again in bad market conditions and wondering why your trades aren't working. Without further ado, guys, jumping in onto the charts here, identifying clean markets. This is important. But before, I'm actually going to erase that. Before I jump into actually identifying the cleanest markets and teaching you guys need to know that one thing comes before being able to identify a clean market. And that one thing starts with a P. And if you can guess it, say it in your head right now. Pause the video. Good. You got your answer? Patience. Okay? And patience is what is required in being able to identify clean markets. Now, Brad, why is patience required? Well, patience is required in trading because most people can't understand that all of these assets on the screen here, all of them, whether you're on crypto, stocks, currencies, it does not matter. All of them operate on their own time. So they operate on their own time, meaning you don't actually have control of when a market is ready to set up and become tradable. And a lot of traders can't handle that because a big part of trading is being able to sit at your desk and not be able to take a trade for hours, days, months, and weeks. And yes, although you want to do this full time, you need to understand and learn and be okay with the fact that you won't be trading as often as you want. Well, that's if you're able to wait for the cleanest setups, right? And if you guys have actually learned or got to learn any of the best traders in the past, you'll actually start to understand that a lot of their systems, they didn't take a lot of trades, and a lot of them ended up losing much more than they won and then earning everything they lost plus more on their winners. Okay? So patience is required 100% of the time. Patience will lead, and I'm going to actually make this black. Patience will lead to this. So if you don't have this, you're probably lost. But if you get that, that opens you up to the world of this. Now think about it, or pause the video, go to your trading journal and look at your trades. And the one question I want you to ask yourself is, do all of my trades look the same? And if you're able to answer yes, well, that's a positive sign, because that means most likely you're waiting for the same given signals or same confirmations every single time. And somewhere in that equation, there is patience. Otherwise, you wouldn't be able to wait for certain rules or conditions to be met. Now, if your trades do look different every single time, well, my question is to you, has anything I said in the beginning of this video actually resonated with you and actually posed the question, am I doing this? Because if so, if your trades look very different, and I will actually show you consistent trades at the end of this video, you are going to actually be helped throughout this video because I'm going to tell you certain characteristics about the market that will help you identify the areas you should be trading. Now, good, you got all that. You understand a big part of trading is patience. and that most people can't exercise patience. And a lot of people correspond hard work with doing more, which in the trading realm, that corresponds to being able to take more trades, because people who think they take more trades are going to earn more money in the long run. And it's a never ending cycle of just the wrong thought process. And that is why 90% of traders fail. Okay. So identifying clean markets. If you guys have watched any of my backtesting videos, then you guys will see what I'm about to show you, or have seen what I'm about to show you on repeat thus far. So number one, if you haven't checked out one of my previous backtesting videos, please go ahead, do so. They're an hour long, there's a couple out right now. I plan to upload way more until the end of time. And if you sit and, pause this video, go watch one of those videos, or watch one of those videos, come back to this video, watch this video for a second time, then you guys will actually have a much, much greater understanding, because the more you repetize things and put them into your mind, the more you're able to apply it, the more you're able to understand it. Okay. So patience and identifying clean markets. Now, if you guys recall in those trading videos I made, if you've seen them, everything I do starts with a higher time frame context. Now, this higher time frame context sets the condition of the lower time frame, or sets the possibility of the lower time frame corresponding with the story of the higher time frame. So we know in bullish structure that comes up after a higher high is a higher low. And instead of this purple marker, I'm actually going to use a highlighter. Higher high, higher low, higher high. Now, in market conditions where we're suspecting is going to continue their trend, then we know that this leg right here is going to play out, or we're assuming it's going to play out. And for this example, we're going to assume it does play out. So what we're worried about is if this is our higher time frame and we know that this is going to move, let's say this is the weekly. No, let's actually go with the daily. So this is the daily. And let's imagine that this leg is composed of, say, 6-7 candles, meaning that this leg was made in about 6 or 7 days. I'm going to take a quick drink of my water here. So in this higher time frame, there was 6 days available to trade the lower time frames. Now, this leg here, we first need to understand that not every range delivers. Now, like I said, for this example, we're going to assume this range does deliver. But you first need to understand that not every range delivers. Some ranges are going to break down like this. And then, you know what we call that? Since it's our higher time frame, and that is what we are, using as a prerequisite to be able to drop down to lower time frames, then we would call this an unclean market if we are planning to go bullish, because the higher time frame would now be bearish. Okay. Now, so that's the first thing you need to recognize. Now, the second thing you need to recognize or understand is that clean markets, or the cleanest, so hard to type with this mic in here. What I am going to do is I'm going to work on getting wireless headphones, maybe a better mic. I'm going to get like a camera on my monitor to get a better view of me, to be able to cut back and forth instead of setting up my phone. So, upgrades are coming and these videos are going to improve. Just, stick with it. So clean markets, or where's the bracket? Am I tripping out? Okay, I'm just going to put that. Or the cleanest markets deliver quickly. So meaning that once this pullback happens on the higher time frame, once the lower time frame goes bullish, corresponding with this higher time frame structure, we expect it to take off right away. So they deliver quickly. Super important that you guys recognize that. When a market delivers quickly, it's showing that high demand is still in place and it's willing to continue its given trend. So clean markets deliver quickly. Now, what I'm going to show you is the third thing. I'm actually going to unveil what this looks like under here, so you guys can take a look at instead of this leg, what the lower time frame inside this area does to be able to continue that trend. And like I said, if you guys have watched my previous videos, you'll understand that in areas like this, you'll actually see price that's moving bullish. I'm going to make this red. You'll see, is it going to go red again? Price that's moving bullish will break down in these areas. And these are the areas that you have to exercise patience, because in this square right here, if we know the higher time frame is bullish, but this red, this lower time frame is moving bearish, what would we call that? Well, we would call that an unclean market condition, because it's not met with the same story our higher time frame is showing us at this moment. So what we wait for is we wait for this inner structure to continue or turn bullish to be able to trade or continue to validate this market further if we're going to continue down the scales of time frame or fractals where we keep zooming into ranges. Now, I know that was kind of a lot, but bear with me here. I am going to get rid of these and unveil this, because what I just drew over here is the same thing that's happening over here, right? So one, you'll notice that one, the range obviously delivers because that's the example we're using, but you'll see that once this lower time frame went bearish and then turned bullish past this point here, it kind of broke through the roof and made a bullish range. That bullish range being here to here. I'm going to make those purple actually, because the next example is going to be showcased in purple. Just to keep everything consistent, I'm going to make this black. Once that lower time frame, which is, we'll put this as the 1 hour. Make this bigger for everyone. A little bigger. So once that 1 hour time frame structure inside this higher time frame structure turns bullish, we assume that it's going to want to go and continue the trend right away. Now, this inside structure, like I said, the first rule was not every range delivers. So this range may want to deliver, right, with this higher low and higher high, but that doesn't mean that this range inside of it, the 1 hour structure, wants to deliver. And that's when you'll see inside breakdowns like that could turn a market bad. And if it does do that, well, what is that? That is another area where we exercise this. Now, you'll see here is that the purple range drawn out here, lower low to lower high or higher high, is the same thing as these. And we expect the same thing the 1 hour is doing inside this range here. We expect that same thing to happen inside this range here with this purple higher low to higher high. The market is fractal. It does the same thing down the fractals, meaning that if a market is going to continue bullish, it is going to do so the same way every time, although it may look a little different. And I'm going to show you that. So this third example is now the purple time frame inside of this range here. So you get bullish ranges that continue, bullish ranges that continue, you get a breakdown, and then you get continuations. Now, the market is time-based. So when we look at rule number 2 in, understanding clean markets, they deliver quickly. So what happens when they don't deliver quickly? Well, the longer a market stays stagnant in a range, the higher probability it's going to turn worse. Okay. So what we look for is when this higher time frame daily range is made is these next 6 or 7 days, we expect this range to be now ran and a new higher high is going to come in. And what that looks like is that these ranges get quickly, they go. They're ready to take off because that momentum has now shifted to the bullish side. Now on, let's call it the 10-minute here, you see the 10-minute do the exact same thing inside the 1 hour range that the 1 hour did inside the daily range. Now I'll share with you the one key difference. And based off what kind of trader you are is going to make a big difference in how long you actually have to wait for a market. Because for this 1 hour to turn bullish inside of this higher time frame daily, it could have taken a couple days because you're on the 1 hour chart. So all of this area here is comprised of 1 hour candles, right? Now, inside of this 1 hour range showcased here, in this area, all the candles were 10-minute candles, meaning that it took far less time for this to set up inside the 1 hour range than it took for the 1 hour to set up inside the daily range. So once those fractals start getting confirmed lower and lower, the more, I guess, time you need to spend looking at the chart because setups are going to happen quicker. So this is what a clean market looks like at a very basic, I guess, foundation. So the rules are not every range delivers, right? You see those areas here where ranges are continuing, then they break down. The market will break down. The market needs to breathe to be able to continue that next move. And then they deliver quickly, meaning that once the price turns back bullish, we assume it wants to go right away. Okay. Now let's look at a different example. This is now going to be an example that's a little bit more dirty, unclean, ugly, confusing, whatever you want to label it. Now you'll see here, it starts off with the same thing. So you have a higher low, or we assume this is a higher low, to a higher high. And you'll see here, instead of just creating, a higher low and then a higher high right away, it actually puts it a higher low, lower high, higher low, higher high, but still not higher than this high, higher low, lower high, and then a lower low. So that's telling us one thing. And let's assume, guys, for this example, that all of these time frames are the same. So the black is still the daily, the 1 hour is the red, and then the 10-minute is the purple. So if we can assume that these are daily candles inside of here, well, this sure looks like in here, it spent a hell of a lot more time playing around than in here, because this is just straight candles up. These candles are going down, up, down, up, down, up, telling us that one, price action inside this higher time frame daily range inside this higher time frame daily range is inconsistent. Now, that doesn't mean the daily range is inconsistent. It's showing us what's happening inside of it is inconsistent. Because how this looks, guys, if I scroll to the left here, it would kind of look like something like this. You have ranges, and then it kind of goes up, down, up, and then goes. Whereas over here, you have ranges, up, down, and then it goes. Now, you'll see here although we're in a bullish range and it still ends up delivering because, like I said, we're assuming these ranges are delivering after all, because that's what ranges tend to do. They don't tend to deliver cleanly all the time, right? And I'm actually going to give you guys a better example than this because this is actually like a breakdown on this time frame. If I'm just looking at individual range, it would be something like this. This is a perfect example. So you have a range. Where's my highlighter? Am I tripping? What the hell? So annoying. Let me favorite this. So we have a range, and then this range doesn't deliver right away, guys. It goes down, up, down, up, down, up. It plays around. And where I was going at with that is that if price on the higher time frame, the daily in this example, is playing around, well, that playing around is going to be showcased differently on that lower time frame. So that lower time frame, the lower time frame structures are actually going to look a whole lot messier. And what I mean when I say a whole lot messier, well, let's write it out. So what does this look like? It looks like back and forth, back and forth. Oh my God, I cannot type with this. I need to get a new setup, guys. I swear I'm not this bad at typing. So there's back and forth. The range is playing out over a longer time period, meaning that all this playing around inside, by this moment, this range has already delivered in a clean market condition. In an ugly condition, it stays playing around, playing out the amount of hours, since this is the 1 hour time frame, that it takes to deliver this daily range, if that makes sense. Because you can imagine if all this internal structure is hourly based structure, there's a lot more going on here for a longer period of time than it would be in this example, where once it turned bullish, it just delivered right away. Here you'll see you have that turn bullish, that breakdown, turns back bullish, breaks down, turns back bullish, breaks down. So the range is playing out over a longer time period. And really, guys, I'm sure there's more. There are more, actually, because we can add on the kind of the implementation of moving averages and what that can tell us when looking at the chart. But these are two major things that you will come to see when a market or a range is turning from clean to ugly. Back and forth, and the range is playing out over a longer time period, meaning that the range isn't as fresh as it was when it first got created. Because what we're looking for in the market is the clean momentum moves that go and continue right away, which showcase that momentum is still sustaining itself. Here, guys, momentum is lost. It's played around for too long compared to this example here. Now, when you go to the 10-minute time frame, this was obviously the clean example. Inside here, this is the importance of being able to confirm down the fractal line and also understanding when something cannot be confirmed. Because let me ask you guys here, if this was your daily time frame and at this point, this is all you saw on the 1 hour time frame, would you say that this is a clean condition to enter in? You have this higher time frame range, and you're now in a lower time frame bullish range that's aligned with that higher time frame range, and we're expecting that higher low to then continue that higher high. Of course, right? That is clean, and it's being consistent, and it's telling us what the market wants to do. Now, when we go back here, you get that original bullish push, which looked clean, it looked fine, and then price breaks down again. Then price breaks up again, down again. Now, we know that since this 1 hour time frame is playing around and it's taking longer to play around, this is going to populate a lot more candles on the 10-minute time frame inside of this area. So not only do you have more candles to look at on the hourly time frame and more data to process, you also have the 10-minute producing data inside all this 1 hour action. And if you guys can imagine, it looks even uglier than the 1 hour time frame did inside this daily range that is proving it wants to play around. Now you guys will understand that the process of jumping time frame or confirming time frames and going down the line until you reach your entry time frame to be able to take an entry is different when a market invalidates. Because back to what I said in the original video, if you take this daily range that's been playing out over X amount of days, X days, and you show up to the market here, well, it's proven that it wants to play around. It's going bullish, bearish, bullish, bearish. You don't know what this market is going to do next. And the dangers is people will show up on days or weeks or months where nothing's available. And they're trading all of this bad action here in a market that's shown it wants to chop around and take longer to play out. Where you could find the market on the flip side that is in a clean range and it's created a clean pullback and has still the potential to go and create that next higher high, because that's all it has shown you so far. At this point, we don't know if the market's going to break down. At this point, we don't know if the market's going to break down here, but it does. And it does it over and over again to the point where it's telling us to step away. Now, the patience part comes in again, because if you're not stepping away from this and you're trading this, well, you're not being patient, you're being impatient now, because this is no longer a market condition that's worth trading, right? And if this 1 hour condition isn't worth trading, what makes you think we would jump down to an even lower time frame where there's more data, more things to process, prices moving faster, and that higher time frame is just going sideways? It makes no sense, because this is what you're entering in. All this action. Let's play the game, guys. Let's play the game. You take an entry here. Let me fix this up here. You take an entry there. Doesn't work out. Or this one works out. Sorry. That was before the pullback happened. So entries would start here. You have the pullback, pullback, and it tries to go bullish. Why is it doing that? Okay, whatever. You guys will have to deal with it just for this example here. So you enter there, loss, 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 loss. Maybe break even. And then it finally goes. Now, it could have obviously continued to chop around. There are more advanced telltale signs where when price is chopping around, you get that, push above all of the chop. It creates a range, and you're then able to, trade this leg as it's moved into a new area away from all of this chop. So, just to keep this video short on the shorter side, these are a very good example of what a clean chart would look like as you start validating down the time frames. And And then this would be a key example of when something looks non-tradable, ugly, something that does require patience, and something most people can't step away from. So if you guys just on, the most basic level can start looking for markets that look like this, that are fresh, look like they're moving, showing momentum, and stay away from markets like this that are breaking down over and over again, taking a longer time to play out, then you're already above a lot of people. And if something's not showing this, then wait for it. So now you guys know what to look for. You know what a clean story looks like on each time frame you're using. Higher time frame, middle time frame, lower time frame, ugly higher time frame, uglier lower time frame, uglier 10-minute time frame, the lowest time frame. If you have any questions, leave them down below. If you enjoyed the video, leave a like. If you got confused, remember, it's a good thing. Confusion breeds learning, and learning is what you obviously need to do. But take time to process the information. If you don't understand the video the first time, like I said, go back to a previous backtesting video, come back to this one, understand it a little bit more, and, apply the knowledge. Even if you just take one thing away from every single video, whether it's my video or someone else's video, stay consistent with it.